Hi everyone, this is Kathy Lean. Let me just refresh my screen. Wonderful. I hope everyone had a very nice holiday and got to spend some time with family. It is another shortened trading week. We had a fantastic evening with our Euro trades. This morning we caught some winners, some losers, Um, but we're still holding on to a lot of our gains, and for the most part it's been the Asia sessions that's been really giving us our profits, and that could just be this month where we have some wonky trading, but I've definitely kind of increased more of our exposure and aggressiveness during Asia. And during North America, we tend to be a little bit more conservative, especially last week and this week, because there's not as much, there's a lot of two-way flow. But there were some very sound reasons for our Euro trades overnight that, kind of is carrying over today, but I guess slightly less so. Basically, we are in the last week of 2020, and there's a lot to be optimistic about. A vaccine for the coronavirus is in the process of being rolled out. Brexit agreement is in place finally in the 11th hour. And President Trump signed into the stimulus bill into law. So with a few days left until the end of the year, stocks are holding on to their gains, and investors are hopeful that 2021 will be a year of less headaches, less uncertainty, and that in itself is the reason why we're seeing a bit of a risk rally. Well, certainly why we saw a bit of risk rally yesterday or overnight. And today, we do have counteracting year-end flows that are kind of affecting things. But for the most part, I think investors still remain optimistic. We closed out of our dollar Swiss trade for a bit of losses, but it still looks pretty good, I think, at 88.95. But we're holding on to dollar yen, which is correlative. Just for a lot of reasons, it seems like North America doesn't have too much continuation. We don't have much in the way of U.S. data, we don't have much in the way of data, period, this week. We will look at the calendar in a little bit. It is year end, so that year end flows, I think, is going to be a really big influential factor in the markets. What may not, I hope not, are headline risk, because everything is pretty much done. So I really hope there's no more headline risk this week that will affect how everything trades, but you never know. I mean, primarily it should be year-end flows, and year-end flows should actually be dollar positive, not dollar negative, which is why I liked the dollar yen trade, dollar Swiss trade, because we've had a very strong move in a lot of the major currencies, like the Swiss franc, the euro, and so forth. And so profit taking, there should be profit taking. Now, this is an unusual year, and so there are factors that may, counteract the profit taking, but I think that should be the case. But the other thing is that, if you were to trade against profit taking and go for continuation, then I think the yen crosses are probably the best plays, because I think that, that those are the risk on trades. That's why euro yen is moving so nicely. Where did we take off euro yen? I think we took off euro yen at 60. It still looks really good. 126.56. I think it still looks like one of the more solid trades. Same thing with Kiwi yen, I believe, that we didn't touch earlier. Kiwi yen, Aussie yen, that had this looks like it's double zipping, which looks really good. And so, those trades are still very much in play. And I think, could be interesting, because I think this, bottom line is risk should stay on during the North America session. And if that's the case, Aussie yen is the quintessential risk on currency. Euro yen, obviously all the Brexit news is really good. So Euro yen, Aussie yen, I think still look very good. And so if you want to lay on something, I think 78.65 Aussie yen looks pretty good. In terms of trading this week, we'll see where we're at with the smooth 40. We are above 100 pips. We always don't count that for our PNL. We're definitely trading today. We're definitely trading tomorrow. Wednesday, we'll see. We are not trading Thursday, and we are not trading Friday. So Wednesday will be decided by how many pips we make and whether we want to hold on to it and what kind of opportunities present themselves. So let's take a look at the views. I am dollar bullish, stimulus deal, really good news. And I think that, treasury yields are up. I think that, we should have a bit of a dollar recovery. I think that should be very much, something, it may not happen. I could be wrong, but I am positive dollars. I'm neutral euros. I want to say I'm neutral bearish because I think there's profit taking, but the fact that there is legitimately positive euro developments in the sense that this Brexit deal, of course, if it kind of collapsed, it would have been extraordinary for not just sterling, but also the euro itself, because it would be havoc for the EU. And while Germany kind of extended their lockdown into next year, Italy, France, Spain, all have seen significant declines in their COVID-19 cases in the second wave. So their lockdown measures are working. They're a few weeks ahead of the US. All of this contributes to this positive euro-yen view, in my opinion. Sterling, I'm positive. Brexit risks are behind us. They're obviously in lockdown, which no one really likes in terms of its impact on the economy. But I think that I'm neutral positive sterling, although from a profit-taking perspective, that is one of the reasons why it could come down. Aussie, I am also neutral, and I think there should be profit taking, but data's been really good. We're getting the zip positive signals, so really, really hard to say. So we'll just stay neutral and just focus on whatever the zip signals give us. CAD, I'm actually bearish. It is not falling this morning, it's actually rising. The reason why I am bearish is because Canada just instituted new lockdown measures in their most populous region. And so that is obviously bad news. And that's going to extend well into the end of January for Toronto. And so, I don't think, that's going to bode well for the economy. And so I'm actually a little bit more bearish CAD than some of the other currencies, even though that's not the way it's behaving. Neutral Kiwi, and then neutral Swiss franc and Japanese yen. Profit taking should lead to some yen weakness, but that is not what we're seeing. I think for the most part, what we are seeing is, continuation in the gains, and that is driving the currency higher. Okay, so with that, let's go ahead and take a look at the eco calendar. Oh, sorry, I did not want to hit on that. Wait, I just wanted to click the calendar. 1 minute. Okay, so yesterday we had only a Japanese industrial production numbers, flat, nothing really all that meaningful. Today we have nothing for the most part. The calendar is very, very light. We do have a little bit of US data tomorrow. House prices, which are expected maybe to improve a little bit. House prices have actually been rising in the US. UK house prices, a little bit of its decline expected in December. US is Chicago PMI, and then we also have pending home sales, which are expected to be flat, and then anything else here. We have some Chinese PMIs, which should be better. On New Year's Eve, we've got jobless claims from the US, and then that's pretty much it. Nothing really all that market moving. Technically, euro still looks bid. and still looks like, the uptrend is intact, which is part of the reason why, euro yen still is pretty good. And dollar yen is below all the moving averages, which isn't great. But I think it looks like it wants to rally in the 4-hour charts. 1-hour chart looks really quite bullish. Risk is on, so that could work. Pound dollar, maybe double top on a technical basis, but on a fundamental basis, I think, we'll have to see. It's really, maybe the Brexit news wasn't as great as it should have been. Dollar Swiss, I would stay away from it because euro still kind of looks strong. That's why we built out dollar Swiss first. Kiwi still uptrend intact. Aussie is holding the 50 and 20 SMA in the 4-hour charts. But, it does look like it's meeting some resistance. So I'd be a little careful there. I think the yen pairs look really good. Euro yen still looks pretty strong. Aussie yen, very similar looking chart. Rallies are getting overextended, but for now, we've got the good news that's coming in. And then we also have, stocks that are up, Dow futures that are up. So everything looks quite good. All right, so now I'd like to open up the floor to any questions you may have or charts that you may want to look at. Let's see, nothing in the chat, Kathy room. Nothing in this box. So looks like it's been okay. One thing that I do want to point out is that I'm going to publish a little article today that talks a bit about New Year's week trading ranges. And while we really don't see too much of a deviation in the euro dollar, New Year's week oftentimes leads a bit of a breakout in dollar yen. And dollar yen has been consolidating, so I would not be surprised to see a bit of a breakout. So, I'll share that. Actually, I'll share that in the chat, Kathy room. I'll share the image in the chat, Kathy room right now. I mean, the article obviously hasn't been written yet, but it just talks about the percentage change in the ranges. So let me pop that into the chat, Kathy room. Ezekiel, I'll let Boris chime in on gold. He's more of a in-house CFD expert. But this is the ranges. You'll see last year we had a huge breakout New Year's week in dollar yen. So that seems to be more of the trading bias that we have there. ZIP has done very, very well for us this year. We hit some snags towards, in early December, but for the most part, we have traded ZIP very well for the past year, and we still made money every week in December so far, although the first 2 weeks of December was a bit of kind of wonkiness. We didn't make too much and with a lot of erratic trading. We're going to try to slow down a lot in 2021 and make things a little bit more approachable. That's really always been my goal, but time and again, what all of this has proven us is that ZIP is, a very, very effective strategy. All right, so if there are no further questions, I will shift it over to Boris, who will share his thoughts on gold for Ezekiel and then the markets in general.
Hey guys, good morning, good morning, good morning. How's everybody doing? Somebody give me a sound check in chat. Ask Boris. Let me know if you hear me okay. Let me grab the screen. Hang on, let me just actually do a couple of things here. Let me put this on the screen. Okay, fine. And then let me just grab the screen. Let me show my screen. Which one do I want to show? Which one is this? This is not this one. No, 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 not the one. Sorry, damn it. Hang on a second. Show this one. No. This one? Yes, this one. Okay. This is the problem when I have 4 vertical screens going up and I always get lost. All right. Good morning. Good morning. Good morning. Ricky, Ezekiel, Rob. Good morning. Good morning. Demetrius. Evharashto, Demetrius. Okay, so let's talk to you. We get, just kind of, I am thinking we're probably only going to do one Zoomy. We'll do it tomorrow, and then we're going to kill everything for the rest of the week. Mainly because I want to get a little bit of rest, and two, it's just going to be pushing on a string. We're gonna force trades unnecessarily. That having been said, today has been just money, 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 money for me on our two-way trading structure, and I've only taken like probably 50% of possible trades because I'm just doing other projects, kind of distracted. But I really want to, and it's actually much better if I'm going to show you on futures first, and then we can take a look at CFDs on. Let me just move this off here for a second. Of what exactly I'm doing, right? And actually, before I do that, I got to tell you, there are three things that I am going to do next year. All of as a result of kind of trial and error and research of this year that I think are going to make massive difference, right? So, and a lot of them are actually have zero to do with strategy, but I think they're going to improve our trading tremendously. So number one, we talked about the idea of trading tiny, right? So I am literally creating two tiny accounts, smallest possible accounts I need for the size I'm trading to trade the market. So and the reasons why tiny obviously works is it's a natural stop loss, right? If you have 100,000 in your trading account, I mean, you want to have 100,000 in like a backup account, but if you have 100,000 in your trading account, you're going to lose the 100,000 on a stupid trade. If you have 1,000 in trading account and you're experimenting with a strategy, you're only going to lose that 1,000. The point being is it's a natural stop loss because if you really screw things up, whether through the strategy or through your own lack of emotional control, which we all have, you'll get naturally stopped out at a much smaller cost. So that's number one, right? Number two, it also forces you not to do the bad things, which is revenge trades. So you can't go 10x. If you have a tiny account, you can't then say, oh, I screw up on this trade, I'm going to go 10x on this next trade, because the account margin will naturally prevent you from making a large bet, right? So tiny is number one. Number two is I'm trading both sides of the market. This is actually probably the most interesting decision I made. We have in our strategy of day trading, which I'll go through in just a second for those of you. I'm actually only going to go through if people who are listening to me right now are going to post in chat Ask Boris for help. In other words, who are going to ask me to go through the rules. And the reason why I'm going to do this is because I want everybody to get into the habit. What I don't like is I'm in a webinar right now. You have my undivided attention, and this is your one time during the day when you can ask me questions endlessly, right? But if you're going to come back at me and ask me questions endlessly on direct message, on stuff you can ask me in the webinar, I'm in 2021, I'm stopping the practice of answering all your questions, because I want you to get in the habit of asking questions through the rules, right? And I don't want you to be shy. I don't want you to be kind of reticent about asking questions in chat Ask Boris, because everybody sees those questions. Trust me, if you're thinking the question, there's lots of people behind you who are thinking the same thing. But I want to get everybody into the habit of asking me anything under the sun in the webinar when you have my undivided attention. Otherwise, it's very unproductive, because you're draining my time from other projects, which I'm trying to do for everybody else in the room, okay? So I don't mind you. By no means, you can always direct message me, but direct messaging is not designed for a one-on-one mentoring, okay? That's not what we do. So please, right now, I'm kind of making my plea here for 2021 that any question that is strategy related, it's going to be in the webinar, okay? And if you can't make it to the webinar, I'll give you 5 opportunities during the day, and I'm probably going to give you 10 next year because I'm probably going to run 2 webinars a day. So you can always make time to get a hold of me and ask me anything under your sun. I don't care what it doesn't even have to be about the strategy, but always ask me in the webinar. We're going to make that rule so it's going to be very efficient for all of us. Okay. Anyways, I got off a tangent. So what the fuck was I talking about next? Trading 2 sides, trading both sides of the market. That's number 2, and I'll explain, how I trade both sides of the market. And then number three, what do you guys notice about the screen right now? What's missing here, if anything? Like, what do you think is missing on the screen that you're looking at? Let's see if you guys can answer that question. Let's see if anybody can notice. What are you guys missing? Looking at the screen right now on these two accounts, what's missing? No, arrows are there. I mean, they're not. We just don't have too many. Here's an arrow here. Here's an arrow there. Arrows are there. Now, it's not anything strategy wise. Oh, candle timer is missing. Yes, it's not anything. It's not anything indicator wise or strategy wise. Think a little bit wider, because remember I said these are 3 things that I'm going to do in 2021 that have nothing to do with the market. They're going to radically improve my trading. Exactly. Demetrius got the answer. Account balance is missing. I have consciously not deleted, but uninserted, like, or whatever. I set up my view on both my FX stuff, and I'll show you if you want to see my FX stuff. I'll show that to you as well. Here, let me show you the FX stuff so you guys can see this too. Hang on. Here's my FX stuff. See what's missing? The money is missing. The money is missing. This has been literally the single greatest improvement I made in my life over the last week. Get rid of the money, you will get rid of almost all of your bad habits. I literally don't know and don't care what my balance is. All I'm interested in doing is making a correct continuation trade and a correct reversal trade. All I'm doing is making reversal, continuation. I don't even look. I do not even look at the P&L. So you know what happens as a result of this? I have not had a single revenge trade since I started doing that. I have not had a single trade where I increased my size. I've not had a single trade that was outside of my game plan. But you need to keep the account balance closed. And actually, I got this trick from there's this massive trader, American guy who went to Australia. Forgot his name, John something. If you, I'll post the interview with him. There's a great interview he did with the Trading Chat with Traders podcast. And he's a multi-million-dollar trader. Rambo, yeah, Crossie knows Rambo, John Rambo. Crossie, you're reading my mind. It's exactly what he does. So Rambo said that does this giveaway line. The guy, remember, he makes millions in a year. He says he literally does not look at his P&L because all it does is it just corrupts his decision-making process, and all he's focusing on is doing the next thing. And he says he will look at his P&L maybe once every 3 months. So here's the irony of the whole thing. I thought this was such an interesting, brilliant insight. You trade like a trader, but you look at your account like an investor, right? Because what's the single most toxic, corruptive thing day to day, minute to minute, point by point that happens to all of us, is the emotional impact of the P&L, right? We're up in the morning, huge. We're down in the afternoon, big. We're trying to make it back. We are trading everything but what we're supposed to be trading. We're trading money, and money is utterly immaterial. Process is what's important, not the money, right? So, and by the way, why do investors or long-term holders do well? Precisely because they don't care about money. They're not looking at money, right? If investors looked at their P&L every single day, they would go, they would become traders, and they would do terrible. So they not only would they, basically my point is, we're trading because we have much lower volatility, much more precise, much better returns than investors do if we stick to our plan. But we can't stick to our plan because we're basically deviating from our plan every 5 seconds because we're looking at the P&L. So the idea is to look at the P&L the way an investor looks at their portfolio once a year or once every 6 months, and to literally just trade your process. Isn't that cool? What time is it? It's it's a little too close to the open. I have a little bit. I have a setup here, right over here, which so this is which one? I forgot which one is my continuation, which one is my reversal trade. I think this is my continuation. Let's see if I can set this up. I'm not even sure I can do this now. It's a little bit underneath here. No, I can't do it. Let me see what time is it. 46 seconds. This is where oh, shit. Sorry, I'm trying to set my sell limit underneath this thing because the candle is actually should be at around here. Okay, let's see if this triggers. So we have a continuation sell signal over here, right? And I got to see if but it's got to clear. I guess it would have actually triggered me on this trade, but I'm a little bit late. But it's fine. I'm just gonna stay at this level. If it closes through this level, then I'm gonna trade it. So market is open, or market is gonna open up in 1 minute. So yeah, and this is a pretty dangerous trade to make. I generally don't necessarily want to be in these kind of trades pre-market, but the whole point of trading two sides of the market is that you want to take, especially since this is the first sell signal in a downtrend, you want to trust your process as much as possible. Although if it turns, it turns on me. That's just it'll be my first clip of the day. So to review, what is it that I'm doing in every single instrument on a day trading, short-term trading, scalping basis? All right, I'm just gonna fuck this. It's a lot of volatility. All right, I'm gonna close this at 375. It would have worked. It would have worked for 5. See, this is where I start, and this actually would have worked perfectly. So it totally would have worked for 5 points. But before I make any trades, let me take 5 minutes. So Wyben is asking me about the process, right? What am I going to be using on a regular basis? Let's see if Boris. I know. If I'm closing them early, they're always going to target. Okay, no, I'm only closing them early because I'm looking. But here's the beautiful thing is when I started setting up all these structures, I just set up the structure and I trade it. So let's review first of all. Let's assume this is the continuation account and this is the reversal account, right? This is the reversal account. So continuation account, you're always selling downtrend, buying uptrend, right? That's the definition of continuation. Continuation means I am trading with trend. Trend is defined as blue under black or blue over black. That's our trend, right? Right? So in continuation, I'm always trading with trend, which means I'm selling the breaks of the buys or the breaks of the sells. In a reversal, I'm always trading against trend. So when I'm in the reversal, what I'm doing is I am selling the breaks of the sell on the buy side, or buying the breaks of the buy on the sell side. So if I'm in a sell trade, but let's just talk about continuation first. So in a continuation account, this is a continuation trade. We have a buy candle. It breaks to the downside. I sold the bottom over here, and I am trading it with a very large stop, small target, 25. 20 in NASDAQ, it's 20 point stop, 5-point target, right? In currencies, it's 5 pip target, 20 pip stop. In the Dow and DAX, it's 40 pip stop, 10 pip target, right? That's the position. And on the reversal side, I have to have a very, very specific setup on the reversal side. So let me I wonder if I can do this here. Okay, so I don't have a reversal trade here. I did have a reversal trade earlier. Let me see if I can find it. Okay, yeah, so this was a reversal trade. So on the reversal trade has a very, very specific signature, and you really need to adhere to the signature, because reversal trade is less accurate than the trend trade. But when you get that specific signature, it really works very well. So first and foremost on the reversal trade is you have to have at least 1 or 2 continuation signals. So this is a continuation signal. We're downtrend, it breaks down right below. So that's kind of satisfies the first condition. Then you need obviously a buy arrow in a downtrend. So you have a reversal signal, buy arrow. And then you need obviously that buy arrow to be broken, to have a candle close above it, right? But that's not enough. You need the actual buy arrow candle. This candle has to be outside of the blue line, outside of the most extreme SMA. The idea has got to be so stretched away that it's not even touching the blue line. If it's touching the blue line, that's already disqualifies it. But it's not touching the blue line. The candle over here breaks to the upside. You then go long on the close of this candle, and you're ready for a reversal trade. That's your reversal trade. Unless you get those 3 components. In a trend trade, it's really very simple. You get trend, you get a signal, you get a break of the signal, you go. In a reversal, you have to have trend. You have to have first a signal that confirms a trend. Then you have to have some kind of bottoming signal. That bottoming signal has to be so extreme that it's got to be really stretched away from the moving average. And then only then, if it beats the high of that on the buy side, or beats the low on the sell side, are you ready to go for a reversal trade? So reversal trade has a lot more composition to it than the continuation trade, right? But you basically trade both sides on a continuous basis. Oh, sorry, this is my Oanda account. Let me come back. Here's my let's trade the CFD account. Here's the CFD account. Let's just see what's going on. Let's just see if we have any signals. I was looking for Dow signals here. So far we got no arrows, so we got no signals either way. So on the CFD account, I'm trading one account because it's just I can trade both buys and sells. Did I get long? It looks like, I wonder if I get long on my. I had a yeah, that must have triggered too, right? So this was I had a one of the problems without looking. Yeah, I wonder if I had a trigger here. I must have. This triggered over here. This was it. Yeah, I had a buy. I had a buy in my pound, because obviously this is an uptrend. Breaks the reference point, goes to the upside. That would have worked nicely. So, anyways, that's the structure of how we trade. We have 2 accounts. We have a continuation account and a reversal account, and we're looking for trades in either direction that's set up. Now, what happens is, so the next big interesting question is, okay, I'm making a trade, right? I'm making a trade, let's say one way, and I have this 40 point stop against a 10-point target. risk control, right? How do you practice risk control? If a trade, my suggestion, and and generally I've done this and this actually works really well. Let's say I got short that NASDAQ, right? And instead of going my way, it goes twice my profit target. It goes minus 10 against me, right? If it goes minus 10 against me or worse, like minus 10, minus 11 against me, I then move my profit target to essentially break even, right? To a flat position, because quite a lot of times the trade will come back to at least give me a chance to recover it, to break even, right? And at that point, it's very likely that the other component, the continuation component, the reversal component, will kick in, and I'm able to work the other side. By doing it this way, you can escape sometimes the large loss. Now, having said this, by the way, the idea here is especially if you're trading the U.S., like a full U.S. session on a regular day, 9 o'clock in the morning till let's say 3 o'clock in the afternoon. And generally, like I think the great the best time to trade is like 4 hours, 7:30 to about 11:30 New York, which is 12:30 to 15:30. Is it 15:30 GMT? Somewhere around 12:30. No, 12:30 to 16:30. So the 4 hours, 12:30 to 16:30. So afternoon of London, great time to trade. And then afternoon of New York, which is about 14:30 or 1400 to about 15:30. Like not the last 90 minutes, but up to the last half hour. Last half hour of trade is a crazy time. You generally want to, just like the first half hour of trade is a little bit crazy time, the last half hour of trade is a little bit crazy time. You want to stay away. If you do that, you generally have between 10 and 15 possibilities, and you should have only 2 losses amongst those possibilities. Yeah, I think the Euro Open is also okay. I like the Euro Open actually for currencies. I mean, in the currency space, it's a really good space. What's going on in the NDX? Am I seeing arrows here? I guess not. No, nothing. In the Dow, nothing in the Dow. German doing anything? German doing nothing. German had a nice sell case over here. Euro has. Oh, good. Okay, let's do this. Let's play this. Euro has a trade. Let me lay this down. Okay. So Euro has a trade right here, and actually we could just sell it. I'm just gonna. Oh no, sorry, I made him. All right. I'm gonna play this, even though this may not set up actually. I may have rushed it, but it's Christmas time, so I'm giving myself time. So this did not set up as a trade. I was actually wrong. What I was looking for is, why is this a trade? It's actually not. It's not even a trade in any way, shape, or form. This is an idiotic trade. But let's just play this. Let's just play with it because I got nothing else going on over here. I'm kind of bored, but I want to kind of show you what I mean. So first of all, it's supposed to be a reversal trade, but we haven't had any continuation signal that proved true, right? We need one trend signal that actually completes. So in fact, what we should be looking at right over here, which we're going to do right now on this chart right over here, we're going to set this up on this chart right here. We're going to put a buy on this order at around. Let's see if we can do this. We're going to put a buy on this order right above this. This is the right trade we should be doing. A break above this arrow in an uptrend, that's a continuation trade. That's what we should be doing. We're going to keep the other trade just for fun and profit. But if this trade triggers, that's a legitimate trade for us, right? And that's what we should be doing as far as a trade. So this wasn't a reversal trade in any way, shape, or form. But the one thing that caught my eye was that this candle was outside the blue line. So therefore, it was a possible setup, but it's actually nonsense. So we'll see if the euro the other way goes, and we'll trade that to the downside. Is this right? Let's see. So this is also not a reversal trade, but if it holds, it's a continuation trade for us. So let's sell this. Okay, let's see if I can sell this. No, I can't. 60. Okay, so it looks like the euro triggered to the upside. Okay, so what we want to do is, this is a continuation trade because this is the first break of the trend. This is a buy candle, breaks to the downside. It's a it's a continuation trade. Otherwise, we got nothing setting up here. Oh, and we got to set this up with 40-10 because this is a Dow, right? Next, Nasdaq showing us nothing. Pound has a breakout trade here, like an upside trade. We're late to it, but let's buy it, and we'll just trade it with a 4 target because we're just late to it. Now let's see if the pound works out. So these are opening round trades that we have in the New York session. Notice, by the way, remember I said to you, euro was the right trade, and look, I think that's clearly working a little bit in our favor, right over here. So the only other thing I was going to say is, when I'm live trading with you guys, obviously I'm looking at a million different things because we're just looking for ideas and we're looking for more trades. But success of this, in my opinion, depends. Well, depends on you. If you're the type of person that can look at 5 different things at once and are very happy juggling a lot of different things, you're great. If you're very, very serially oriented like me, where you're only good at doing one thing at one time, I actually recommend you focus on either 1 or 2 instruments. So you could focus. So the pound just TP'd for us. That's good. And then we'll see the proper euro. The proper euro. Should be in play, but we'll see. So I was going to say, the reason why is because you can see that when you're on a 1-minute chart, right, it requires a lot of attention to run more than 1 or 2 instruments. You're flipping around. I actually have 4 screens. I have a dedicated screen to currencies, and on the currencies, all I have is the euro and the pound. And then on the futures screen, on the indices screen, I only have Nasdaq. And even that, frankly, just looking at those 2 screens, I miss a lot of trades. Because I'm busy or I'm not paying attention, or like the setups sometimes are a little too quick. The new version of the tool that's going to populate the actual price for us is going to be really useful for us to help us set a lot of these things up. But frankly, the solution to this is, if I want to intensely trade for a couple of hours and do nothing but focus on my screens and do nothing else, great. If I need a little bit more relaxation and pace and stuff like that, then just only do one thing. And if I really want to have a much more leisurely approach, the future version of all of this stuff, is obviously going to run on much longer term charts, much longer term trades, where we don't have to, worry about missing 1 or 2 pips, because we'll be trading for much larger positions on an hourly or even a 4-hour chart. Both same idea, both sides of the market, but you just do much more leisurely face, and that's going to help us run this thing. So there's the euro almost touching. It looks like it touches. There we go. So the proper euro trade worked. This one I'll just get rid of because it wasn't even a right trade. So the pound trade worked. The euro trade worked. I got nothing on the Dow because the Dow is reversed. Nasdaq is down, but no, not sending me any signals. Let's see if it's sending me any signals on the futures side. Where's my future side? Nope, nothing here. Seems to be quiet both sides. But the point being is, within a 6 to 8 hour time frame during the day, you definitely have on a 1 minute chart. If you're doing Nasdaq or if you're doing Dow, if you're doing Nasdaq and Dow both, you certainly are going to create between 10 and 15 trading opportunities. And if you're doing this properly, if the markets are cooperating, most days you should be looking at basically, 2 losers to 12 winners, 2 losers to 13 winners, somewhere in that ratio, where the net P&L, of course, is positive as a result of this. Now, obviously, things are good. A lot depends on whether you catch every trade, whether you're focused, whether the market really cooperates in terms of structure. But the beautiful thing about this approach is we're generally the whole thesis here is we're trading trend when it's trending, we're trading turn when it's turning, right? Like right now, we traded pound was trending, right? Like both pound and euro are trending. They trended to the upside. They give us clean signals and stuff like that. Metals, what about metals? So again, Boris asked me about gold and everything else. All great ideas. It's a question of how much attention span do you have, right? If I have 10 or 15 trade ideas within NASDAQ alone, that's more than enough to keep me busy and have me focused on positive trades, right? So it's not that I'm not trading metals. I'm just, I have a finite amount of attention span. And frankly, between the euro, the pound, and NASDAQ, it's maximum that I can do. Even within that time frame, I'm really missing a lot of opportunities, right? But what's good about this is that if you want to trade Bitcoin, if you want to trade gold, if you want to trade anything else, you can do that. You can totally do that. Look at the Dow is just completely reversed to the upside. No signals for us, unfortunately, for right now. But let's we'll hang out. Let's see if we can get looks one way or the other. But as I said, the principle of our idea is when we're trending, the system should only trigger trend trades. When we're turning, it should trigger trend trades. Obviously, we're going to get false positives. The key thing is by staying balanced, we don't get too many false positives. And the whole system is designed on very high probability, small, consistent trades that at the end of the day, it's like insurance premiums. You've collected enough insurance premiums, you've made yourself some really decent P&L at the end of the day. And you don't, the thing is, you don't watch your P&L. You just look to make sure that you're executing the proper trades. That's my big thought for next year. And then obviously you can take that process away from the 1 minute chart to the 1 hour chart, the 4 hour chart, into a multiple portfolio type of structure, and which we can, by the way, automate, right? I mean, because we already have the automation component of the continuation trade built into the reversal EA, but we can also built in the reversal component, and then we can also semi-automate, which is what I'm working on as well with Doug, where the tool, the little applet that we have. Where's this little applet? This little applet that we have will allow us to say, oh, there's a sell signal in an uptrend. Just set me, if it confirms, buy me, and the applet will automatically buy us instead of us creating the whole structure. Like you'll automatically set up a structure and just buy if it stays within 10 periods or whatever timeout we have. So we're going to have lots of tools. We have the strategies, we have the structures. So it'll all be really, really interesting, I think, as the year develops. What was that? Which signal was this? Oh, this looks like it looks like it's a pound signal. A pound signal. Okay, so this is interesting. Okay, so now we did have a big breakout. This pound signal is a legitimate reversal signal, right? Reversal signal. And actually, I've missed it because and this is what the applet will do. The applet will actually set us up. So what we're going to do now is going to wait. We're going to wait for 28 seconds and see if this holds, if this candle closes below this level. And if it does, we're going to be happily trying to see if we can short this on a 25 basis. On this basis, so we got 8-9 seconds. It's a big move here, but we'll see. Whoa. All right, so I'm short this thing now on a reversal base. And so why was this a reversal trade? We have an uptrend. We had at least one positive trend trade here, which worked, to the upside. This particular candle closes outside of the blue. This one really moves. I mean, it may be a situation where this was such a big move. From what was this? From 32 to 24. It wasn't quite 10 points. So the other thing is volatility. Oh, I forgot to tell you. So the other thing that we want to do inside the properties is when do we want to ignore the trade? Like when the move, like how big is too big for us to participate. So let's say if this candle was huge. Let me close this out. 4. Okay, good enough. What's too big in terms of volatility? Meaning, if this candle was like 100 points, all of the profit was already in the candle. And I think the answer that's interesting actually now that we have the really wide settings is half the stop loss. So when we set the volatility filter, we want the volatility filter to be basically 0.5. And this is assuming our stop loss is going to be 4 times our target, right? So the basic formula is if the candle is twice as much as our target, or 1/2 our stop loss is 4 times our target, right? So it's going to go off the stop loss value. The volatility is always off the stop loss value. Then we can ignore that trade, right? And this trade was a little close. It was like 8-9 points. It actually made full 5, but I took 4 because it was a little close. But you see the point. I'm trading currencies 1 minute. Do I prefer that to 5 minutes? So Jonathan, remember I said to you, you want to trade this on a 5 minute if you want to give yourself kind of a little bit more, if you want to give yourself clarity of trade, like accuracy of trade. And that's true if you're going to just trade one side of the market. Let's say I only want to trade trend, or I only want to trade reversal, right? But when you're trading both sides of the market, where I'm just basically have 2 accounts, where I'm trading one account as trend, one account as reversal, right? It actually is better on the 1 minute chart. I'm going to pick up a lot more opportunities. I'm going to make more errors, but I'm also going to make a lot more trades, and the positive trades will offset the errors. So that's sort of like my thought pattern on all of that. Yeah. I mean, I like the 1 minute chart for scalping, and what I'm trying to do is I'm scalping, right? And I understand that this kind of approach is completely unattractive to maybe a lot of people. It's very attractive to a lot of people, like you, like Boris, there's lots of people who are hardcore who trade with us every single day. That's my little scalpers club, right? But there are other people who are like, this is 1, it's insane, and 2, I don't have the time. 3, I don't want to do this. Totally agree with you, which is why the future of all of these trades next year will be in the ability for us to to have signals across much larger time frames, where we can participate on a much larger time frame basis with the same logic set. So I will be creating swing-like versions of these ideas with hundreds of points of targets, hundreds of points of stops, on trading both sides of the market, same ideas, which is much larger time frames. But for live trading, we're scalping. We're not like sitting around. And and I'm perfectly happy scalping all day long, as long as I'm doing it this way, where I'm not over trading. I'm only taking the positions, and I literally have no idea where my P&L is. and I will not look at my P&L until January 31st, and I'll let you know, what it does. I ignore my daily run sheets and everything else. And I find it like unbelievably mentally relaxing. Not to mention much better, in terms of control. I would like regularly get myself down 10, 20% on the whole account in a day, with like by the morning, to then bring it back up to break even, do that like 5 times in a week. And that's just, like, what is the point? What's the point of having a heart attack every day? So no, not doing that again. All right, let me see what's going on in the markets here. NAS, no signals. Dow, nothing. All right, well, we can hang for a little longer. Let's see if anything's starting to set up. So far, all we've had is just no, we did one NASDAQ trade at the open, and then we just had nothing but currency trades, all of which worked, which was nice. We had like 4 trades that all worked our way. All right, what else? So, questions? Anybody in the room? Hit me. Who's new? Who doesn't understand what we're doing? Who doesn't know how to use these things? I'm looking through the room. Looks like everybody here pretty much knows what I'm talking about here. Yeah. All right. There's nobody new, which is great. Anybody trading? Anybody traded NASDAQ today? Anybody trade anything using the structure that we have? What is that? Something on the futures. See, the futures are actually showing. That's not a reversal trade though. That looks like that is the first. That's a sell. That's a buy candle. It's called Reverse Trader Pure. That's the name of the indicator. Reverse Trader Pure. Okay, so we have like I forgot which one is the continuation one. Oh, this one. This is the continuation account. So I always forget. Sorry, come on over here. Let's do this. You know what? Let's just do this on the CFDs. It actually showed up on the CFDs. Let's do it this way. So, okay, why is this not working? Oh, here it is. Okay, so we're gonna set underneath here. So we have a continuation trade here, downtrend, buy arrow. We're gonna see if it fails the buy arrow. Fails the buy arrow on the sell side here. Okay, with a 20 and a 5. So those of you who are wondering, like, why such skewed stop loss and take profits? Well, there's 2 reasons. One, remember, we're trading both sides of the market. So sometimes if we're completely wrong on one side of the market, we're not really losing 20 for every 5 that we risk. We'll make 5 back, so we'll be losing only 15. Still terrible odds, but they're rare. They're relatively rare, right? But more importantly, I tweeted out on my Twitter, and let me see if I can retweet this to you guys. It's a very, very good article about written by a quant about what does it mean to have a stop, and why a lot of assumptions about stops are actually false. So it's not, it's by no means an article against stops, but it's just a much more intelligent understanding of the limitations of stops, and why having tight stops actually is almost always a bad idea. Let me find it. Here it is, the hidden truth of stops. Let me just I'm actually going to just post the link to this thing, copy link address. See if I can send this to you. If you guys didn't pick it up on my Twitter feed, but this is a really interesting article. That will make a lot of sense to you, but you need to read it. You need to understand it. That a lot of assumptions you're making about what a stop does are actually not true. So you really need to understand its full value. Okay, it looks like we might be able to trigger a fail here. Let's see if we get a buy side, a buy arrow fail. So Mel, you were asking me what the indicator was. The indicator is called reverse trader pure. This is an indicator. No triggers so far. Okay, might be able to trigger on this candle. So we have like 9 seconds. Let's see if this trade triggers to the downside. Okay. So just on a general macro theme, I was going to tell you guys, I think Kathy is right. I think tomorrow will be absolutely the last day of any kind of, we're basically done with the two big unknowns that were facing us, which was stimulus in the US, we finally passed that misery, and the Brexit deal in UK. And so once you take the air out of those two unknowns, I think it dampens, lots of volatility. The market obviously has a positive bent, but it also may be at the end of the day really ready for a sell-off on profit taking, right? So the good thing is we're clearly going to. There we go. It's done. Come on, do me. What the fuck was this? What the hell was that? That did me on futures. This is bullshit. That did me on futures. What did this miss just on the spread? Oh, damn it. Sorry, I didn't have my candle, okay, I'm gonna be very patient with this. And generally, by the way, also the other thing is I don't intervene in all these trades now. Although, of course, when I'm live trading, I'm always going to intervene. God damn it. Now I'm really pissed. That was like 4.9. That was right there, right? Oh. All right, I'm closing this out. I don't care. I'm closing it out because I'm too annoyed. But it's actually now it's going to go probably just totally trigger to the downside. Did anybody else's trade get done? Because it definitely got done on futures. I don't know why. Oh yeah, Ezekiel says that he got TP'd something with my spread. Eventually, even my spread is probably going to get done. I don't know. I think maybe it's because it's the holiday spreads. What up? Oh, these are big ass spreads. Oh, I was just looking at this. These are big ass spreads. No wonder it didn't get done. I'm sorry, I wasn't even looking at these spreads. It's holiday spreads here. But anyways, it's getting done over here. It's done. It's done. You see on the other side here, the future's definitely done. All right. You missed your trigger, Cheryl? Messed. Jonathan, did you get done on the NQ? Yeah, I mean it was definitely done on the future side. Ezekiel, were you trading CFDs? You may be getting it, but it doesn't. At this point, it's all moot. I'm like, everything does get triggered. Yeah, it looks like, I think the problem is that maybe I got triggered just to tell you. It doesn't matter. This totally would have done it. But these are kind of, I'm looking at what is this? I can't even figure out what the spread is here. 10, 70, 30 to 79. It's like, this is like a 7-point spread, 70-point spread. It's big. Usually they're at 30, 40 points. So they're like they're a little wide today. But okay, it's fine. I think maybe because these are not razor spreads. These are like full-in spreads. But yeah, whatever. Anyways, it doesn't matter. Everybody would have gotten more than done. You can see, as I was saying to you, we could be setting up for a little bit of a sell-off, right? But anyways, all good. Both Nasdaq trades were positive. All the currency trades were positive. So it's like five good quality trades on the structure today. Oh, good job, Cheryl. You just your TP was a little bit off. Oh, I see. I get it. Yeah, I know. So like what I'm really hoping for is when we automate, like in other words, when this applet integrates with the arrow, like when it knows the values of each thing, and can automatically populate the window and trigger a setup, like basically trigger a setup. It's just going to make our scalping that much easier, because then it will be a truly quasi-automated structure, right? Like all we're going to do is we'll just have like a button that says do buy setup, do sell setup. We'll just press that button and then it will automate everything and create a entry structure, everything else. All right, what else? Anything else on your mind, guys? We're done for the day, I think. What do we do? 25 points today, actually, not bad. Close to 25 points. But the thing I really, really want you guys to think about personally, Jonathan, just honestly, you could just go to my Twitter. You guys want to talk about Twitter? Okay, let me just kill all these. I have too many things. My system is stressing out. Let me bring this over here. So if we go to FX flow. Oh, sorry. Yeah, Twitter FX flow. Sorry. I forgot who remembers how to export my lists or copy my lists. What is this? You can just look at my, like breaking news list. You can just follow my list, like follow my lists. Macro and FX list. What I would do is I would just follow my macro and FX list, my breaking news list, that kind of stuff. And you could, what is this? What is this pin arrow? What does this do? I wonder what that means. Anybody knows what that means? List you're on. Create new lists. If I'm pinning the list, does anybody know what that means? I gotta actually figure out. What about news feeds? Breaking news and I'm trying to figure out like what are the members of this list? Oh, list members. Okay, you can see this. Forex Flow, Bloomberg, Walter Bloomberg, AFP, Live Squawk, News Squawk, Bespoke, Markets, Forex Live. That's a pretty good list. It's pretty gonna pretty much give you all the key news you want on that. And there's a macro list. If you go in here, there's 28 members on the macro FX list with, and you can, you can copy all of these things. And I should probably update this, frankly, because there's like a couple of things that are not that great, and some of them that I can do much better. This guy's great. Anthony Barton is great. He does a good job. So yeah, you can just steal from me. That's what it's for. All right, let me kill this. All right. Ooh, we have a possible. Did I miss this? So 1, 2. This completed. This is a reversal. This is a reversal signal that actually closed above, right? Closed above. So we, you could probably take this to the upside. It's a little wonky. Reversal signals are always a little wonky, but I think this one will be okay. It's worth a shot. So if you came in here at around let's say 74, can we make 79 on this? Because I'm not trading this right now because I'm not watching it. But could we have made 79? We'll see. It's got to stretch out. What's the proper entry on this? You would have come in at 72. No, sorry, I was late. So yeah, it's 72 all the way up to 77 would have had you done, and this actually would have hit 77. So you would have made 5 here, but you got to be super fast. The thing about reversal trades, sometimes I'm very leery of is if they really do break, and then sometimes you have lots of continuity again. They're less accurate than continuity trades. So if you're not on top of them, then I'd rather breathe and let them set up again. Like if I have this series of candles, and if I missed the reversal trade in the first time, I couldn't make it. If the candles reline up and close above the high over here, which in this case is 72.25. So we can actually let's put this up. I'm actually going to show you what I would do. I would put a buy on 72.25 here, and if it comes back around the second time, I'm going to have a lot of confidence that that's going to be a good reversal trade, and I won't have to suffer like a big knockdown. I usually like when I'm looking at reversal trades, I like to have some flattening out before. Typically, you notice the price action move, cliff, flattening out, reversal, right? And if you don't get that flattening out, the sharp V-shape, the V-shape sometimes will flame out and just stop you out. It's it's all part of the process. You can't make it perfect. The beauty, as I said, of having both sides of the market and both opportunities is like literally every 20, 30 minutes you have a potential trade setting up, so you have lots of opportunities, and you can watch those on a continuous basis. But it looks like this one isn't going to quite trigger for the next couple of minutes. So I'm going to let you guys go because I got other stuff to do for the big boss. Good day today. We'll do one Zooming. I think we're going to do one Zoom next tomorrow. We'll just do one Zoom. I'll post the link, and then we'll go. Oh, and here's a new reversal. So this is the other thing is if we get a new signal, right? Let's see. Let me just show you. Unless it exceeds this signal, then we can use this as a reference source for a possible secondary trade. So it's got a lot of seconds. It's got about another 30 seconds to go. So first of all, we've got to make sure that it is actually a reversal signal. Nothing is complete until the candle is complete, right? That's our motto. Nothing is complete until the candle is complete. That's literally the motto of this room, right? Okay, so we got 6, 7. That's a relatively safe zone to place this over here. Boom, 1. Okay, so now we lowered our entry, and it's got to, if you can break 68 on a closing basis, then we have a reasonable chance for reversal. Or otherwise, or maybe it'll just keep falling. So that's how we stand. All right, guys, we good? Any other questions? Anything else? Chat Ask Boris. Everybody's having a good time? Okay. Then everybody have a wonderful, wonderful day. I'll see you guys tomorrow for like our last full session of the year. And I'm glad everybody banked out today. It's been another good day. Hope you guys are really enjoying it. Everybody have a great day. Talk to you later.